Okay, folks, welcome to Sunday Night Futures Live. This is Bob Desmond, and what we're going to be talking about tonight is the opening price action. And as you can see, we already have natural gas with a rip your face off open. I'm going to look to sell puts here, probably live tonight on any pullback. So stay tuned. We're going to be talking about whether or not this this market is ready for a rally. Our equities are oversold. We'll talk about the sentiment in the market and why I believe that sentiment is about to change a bit. So I need to set up an alert here on natural gas. I have a call spread above that I need to protect and hedge. I kind of knew this was going to happen, this gap up, because I was looking at the 15-minute chart. And you could see the nice consolidation here on Friday, and now we're getting that follow through to the upside. There will be a retracement, 5-minute view. There may just be a retest of support. We're up about 3.5% now on natural gas. This is where we're going, right here. Okay, I'm just going to set up an alert up there. I may sell another call spread against this if we hit it. Okay, so that's natural gas. Natural gas moving big league at the open here. Let's go back to a 5-minute chart. Let's check in with the equities market. The NASDAQ, I'm happy to see this. NASDAQ opening down. And I'm going to go to a chart of bullish sentiment on the NASDAQ in a little while. And this will just speak volumes it'll speak volumes as to why I'm happy to see this pullback here. We've had a couple of nice reversal bar days over the past couple of days. I closed out most of my shorts on during the week, and we opened up new long positions. If you remember, you would have gotten the alerts on all those trades opening and closing. And we had a solid week, a good week last week, where the NASDAQ was down along with the S&P 500. So NQ retesting a support level here. I want to know if we follow through to the downside. We may just get a reversal bar here and begin to trade up. Watch the 15-minute bar at or below. Let's go to a 15-minute view. I want to know if we take out the highs of this 15-minute bar, because I'm skeptical of this sell-off right now. I really am. If they take out this level here, I think you're going to have a strong open tomorrow morning. If they don't, well, we'll probably open up red. But my guess is that we'll probably get a reversal bar as well. At least I think tomorrow. If we don't, then we're going measurably lower because Friday was a clear sign that we had buyers below. So we'll keep an eye on this. Momentum is to the downside. Let's go back to the 5-minute chart. Let's see how the other indexes are opening up. We had a closing 5-minute bar below support. This is going to be a retest. Do we break down? Looks like we may further. Let's take a look at the E-minis. E-minis moving down 0.55%. RTY, which is the Russell 2000, also known as the RUT, moving lower by 0.67% at the open. We're not seeing volume here. I wouldn't buy this just yet. The Dow Jones Industrial Average, which has probably the prettiest chart of the major averages. On a daily time frame. All right. So again, we're not seeing volume here. Let's say hello to folks. Make sure my microphone's working. Franklin, welcome. Sean, thank you, sir. Appreciate that. Larry, next support level, S&P 500, 5661. After that, it breaks and headed down to 5110. Okay, good evening to you, George. TF Hatter. Hey, brother. If you're long Bitcoin, don't look. Oh, they're crushing it? I'm not shocked. It did not close well last night. In fact, let's take a look at Bitcoin. MBT. Wow. Natural gas just broke out higher. God damn. We'll come back to this. NASDAQ just broke down to new session lower lows. We're seeing the Dow Jones. I'm going to sell a. I just sold a contract on natural gas short. There it goes. It's going to continue to move up. We're going up here. I'm not going to. It's only a one lot. We'll add more up at that level. There we go. Rip your face off move on Natty Gas here. It's a market order. Why aren't they filling it? Somebody's playing games. What the hell happened? Are we frozen? No. E-minis are moving. Let's go back to MNG. Wonder if a circuit breaker got fired off. They may have halted trade here. I think they halted trade. Okay. We'll come back to this. I'm going to set up an alert, letting us know if they open it again, at or above. Create an alert, at or below. It's reopened. I don't know what they're now. Something's wrong here. All right, we'll come back to it. Strange. Can't get an order off. All right. Let's go back, see what the NASDAQ's doing. Finding a little bit of support. Let's check in with, we were talking about Bitcoin earlier. It's finding a little bit of support. Let's go off this 1 minute chart. Down over 6%. Let's stick with currencies. Japanese yen up 0.23%. They had a really good week last week. Euro up as well. So that means that the dollar is down. Yeah, so the dollar's down 0.09%. Not that bad with both the Japanese yen and the euro up. Back to natural gas. I need to keep a close eye on this. If equities rally, natural gas is going to pull back. But we're not seeing any real momentum off of these support levels. ES didn't hit it yet. NASDAQ has. All right, let's check in with gold. Gold up 0.21%. SI, silver, up 0.19%. What else do we want to take a look at? Let's take a look at we took a look at natural gas already. Let's go back, circle back to it. And I want to take a look at light sweet crude. Light sweet crude down just shy of 1/3%. Copper, oof. Let's go to a weekly chart for copper. Copper's been doing really, really well. Really, really well. This is a weekly chart. Path of least resistance is clearly up. Corn, we have a long position here on corn. Corn is up 0.03%. Soybeans, they've been doing nothing. They're up fractionally. And wheat, just this week or last week? That's last week. Just barely holding the support level. You could argue that it broke support at the 21 period EMA. Okay, let's circle back to that natural gas is just en fuego. Yeah, we're right at weekly resistance right now. Okay. All right. Okay, folks, let's get started with our friends over at TrendSpider. They are the sponsors of the show and top 5 features of today that my members have feedback on that they love: automated technical analysis, dynamic price alerts, and multi-time frame analysis, smart trendline technology, and back testing strategies. Awesome stuff. Head on over, get a bare minimum 35% discount code. Use the link below. Head on over and get your subscription to TrendSpider. And I believe in it so much, I give it away free to our silver and gold level members. So please take advantage of it. Awesome tool. I'll be demonstrating it in a little while. Economic data coming out this coming week. We have nothing coming out tomorrow, Tuesday. This is going to be big for uh, the small caps, the NFIB Small Business Optimism Index Wednesday, CPI. So it's going to be another inflation week. So buckle up. We're going to have CPI. The number you're going to want to watch is CPI year over year. Core is what the Fed supposedly watches. I think that they watch everything. Whatever suits their needs at the time, they go by that number. We're going to have on Thursday the PPI, that's the producer price index. So the question is, are the producers seeing cost increases and are they passing along to the consumer? So we'll get the answer to the consumer question on Wednesday, and on Thursday we'll get the answer on the producer level and consumer sentiment on Friday. So a lot of economic data coming out this week. So buckle up. Going to be a busy week. Not much in terms of earnings. Earnings are by and large done. Now the Fed Watch tool, let's refresh this because this may have changed since we went live. No expectations for a cut, 3%. May, 32.8. This was up to almost 50% midweek last week. June, probability of an ease, 81.9, and July, 88.3. So we don't have rate cuts for the foreseeable future. You know, you have 2 Fed meetings, and we have a long way to go between now and June. So a lot can happen here. Expect volatility. As a matter of fact, I want to go back to the equities market for a second. I want to know. Yeah, they're really pulling back on natural gas now. I want to close out that trade on the filling of a gap down here if we do get down that low. You're seeing some sellers move in here. Not a lot, but some sellers are moving in. I don't know what that was. I've never seen natural gas jump 10% at an open like that. That's, even for natural gas, that's crazy. And I'm pretty confident that they stop trade here. Okay. Let's check in with the NQ. As we're talking about other things, I just want to know in the back of my mind if we continue to weaken here on the NASDAQ. So that way I'm not out of the loop. It's always good to have your alerts out there. Volatility is up 2.61%. Let's check in with yields. MNG yields are down. Let's go back to MNG for a moment. I want to see just how much weakness we're getting here. Not too bad. Still very strong. But we're getting a good amount of sellers now into this strength. Okay, our alerts are set. Let's get back to the regular scheduled program. All right, so the S&P 500 last week was down about 3.4%. And going into the new trading week, I haven't looked at this yet. Seasonality wise, it's not a great week. Historically, up only 47% of the times, but we get progressively better thereafter. Now, on the month, we're generally up 61% of the times, but again, we get better thereafter, with April and May being the two best back-to-back months out of the year, going back 18 years. IWM, small caps, they were down 4.382%, generally up 61% of the time in the month of March, and gets about the same in April, but it gets better in May, with May being the second best month along with July out of the year. Now, on the week, going into this new coming week, we're generally up 59% of the time. So one of the more seasonally favorable weeks out of the year for the small caps. And I have a chart I'm going to go over in a moment that that helps support a potential rally in the small caps. As for the Schiller PE multiple, we're still very, very expensive. There's simply no reason to believe that longer term that the selling is done. I mean, what's changed? The reason why we're selling off right now is tariff concerns. Has that changed? No. In fact, today China put retaliatory sanctions on Canada, so this is heating up now globally beyond just the United States thing. So it's widening out. So the market on a rear view mirror basis is very expensive. The Buffett indicator, despite the fact that we're down off of the highs, we remain strongly overvalued and at nosebleed levels. We are still above a 2 standard deviation move, with historical trend being down here, which is completely bananas that this extended. Now, another way of looking at valuations in the market, this is the S&P 500 adjusted for inflation. I don't want to go into his hyperbole. So he's making the point here, adjusted for inflation, the equity markets are still extremely overvalued. That being said, I think that we're probably going to get a short-term rally. That rally, in my book, is to be sold and go to cash, get short, whatever. But I think that we are going to continue lower on the year until such time as the market gets clarity. That clarity is going to have to look like they have Fed support. We got the assets under management last week out of the Federal Reserve. They continue to roll off debt off of their balance sheet, which is hawkish for rates, meaning they want to go up. We saw a bullish key reversal bar on the week last week on yields. Now they're opening up down. We'll see. We'll see here. But the price action on the 10-year yield, let's go back to, hold on. We got a little bit of a pullback here on natural gas. I wanted to sell a put spread. I don't think I'm going to get the opportunity to on a further pullback. They're stabilizing it here. Okay. So let's go back to yields for a second. Here's the weekly chart of the 10-year yield last week. This is very, very bullish for yields, not bearish. So the Federal Reserve is not helping with rates right now, long story short. Now, the insiders, or the big whales, I should say, Warren Buffett, as of the 22nd, we've gone over this before. We know that Warren Buffett has been selling equities for a long time now. And now you've got Jamie Dimon, whose stock has just tanked. As of the 20th of February, sold $234 million worth of JP Morgan stock. And the drivers of this sell-off are no less than the names that have been driving it up higher, the Mag 7 names. In pink, I guess, salmon, if you want to call it, contribution of the Magnificent Seven stocks as a measure of the sell-off of the NASDAQ 100 in line chart. So clearly, it's the Mag 7 names driving this equity market down lower. Now, I think one of the places to be right now, despite the fact that I can't invest there at a good conscience, maybe in an ETF I could do it, but China, their inflation is below zero. They're in deflation right now, so they're looking to pump liquidity. They have pumped liquidity into their markets. Now, what you should be asking is, okay, so how did China do last week on that news? Well, let's go back to the SPY. Here's the weekly chart, down nearly 3.4%, whereas the FXI was up 5%. So the trend is clear, it's defined, and it's up. That's where we're going. About $40 a share on FXI. Seasonality, not that great. I don't call 50-50 odds good odds. In fact, I would say they were poor odds. But let's pull back to a monthly view for a longer term perspective. Overall, I mean, the next couple of months are strong up months, in particular March. So the FXI looks very, very favorable here in the short term. Now, I mentioned earlier that I was growing more optimistic about the small caps for a rally only. Now, if yields break out, small caps are not going to be able to rally with the rest of the market if, in fact, it does rally. Now, the Russell 2000 ETF, IWM, which is what we track, is down 6 weeks in a row. It has never fallen 7 weeks in a row before. There's always a first time. Okay, we'll get that out of the way. There's always a first time, but the probabilities of this going an 8th week are highly improbable. So there's a very good chance that we get a rally this week or next on the small caps. So what's our trade here? Do we have one? Yeah, we do. We bounced off of support last week. There you go. Can we retest it again? Sure. But I think that we have a short-term bottom in the making here on the small caps, and small caps generally outperform the large caps beginning the 6th month from the first Fed rate cut. That was September. March is month number 6. September, October, November, December, February, March. So watch out for the small caps. Let's go to a daily view. Not much of a good setup here. It's a setup, but not a great setup. So I wouldn't go buying tomorrow. Let's move on. All right. So in terms of the strength of the economy, U.S. underemployment, not unemployment, underemployment rate is rising as if there was a recession. Americans working part-time while seeking full-time employment spiked 460,000 in February to 4.9 million, the highest in 3.5 years. The underemployment rate hit 8%, in line with the 2001 recession levels. And this is all being reflected in the yield curve. Now, I'll go to the yield curve in a second, but Charlie Bilello, he posts some really good stuff. So first off, a tip of the cap to him, because I'm about to disagree with him somewhat. The S&P 500 has fallen over 7% from its peak on February the 19th, the largest pullback since late August. This is the 30th correction of greater than 5% off of a high since March of 2009 low. Okay, I'm not going to argue. They all seem like the end of the world at that time. Okay, sure. I'm with you on that. Not a problem. So what I want to point out is that you need to cross out. Here's the yield curve. He's going from the baseline of a 2009 low. Fine, that would be right here. So during that point in time, the yield curve, which he doesn't mention, to be fair to him, it did not come from an inverted position to an uninverted and steepening position as we are in right now. It peaked out in 2010, then inverted in 2019. So you need to take every data point that he's got here from 2010 to 2019, and there's quite a bit here. You have to take them off the table because it's not in the same context as what the yield curve is telling us right now. The yield curve is telling us that we have problems out there and that the Federal Reserve is going to need to step in, because what I've been projecting for a long time now is beginning to play out. You have a double top on the S&P 500 in gray, silver. You have gold ripping up higher. You have natural gas ripping up higher, which is the reason why I need to get a hedge on my short, long put position, long call position to protect it. TLT underperforming, which is very unusual because generally this would be the leadership group. It just tells you right now what the problem is. The problem is the debt. It's the debt. A lot of concern about the U.S. economy, tariffs and whatnot. Normally money would flow into U.S. bonds. It's not doing it because there's a concern about the United States right now. Oil is iffy during a time where the yield curve is putting in higher lows and higher highs and inside the red zone. So this is a longer term bearish case. That does not mean that I don't think that we can not get a rally in the short term. Now, right now at the open, we're clearly not getting the cooperation of the futures. Let's check back in with the NQ and see what it's doing. My alert hasn't fired off that we have broken down to new lower lows, and we're beginning to see a bit of a comeback here, but still down 0.82%. Got to check on my natural gas. It's really petered out here. Okay. All right. What else do we got? Gold. Gold sees the largest 4-week inflow in history, $4.9 billion last week of gold inflows. So clearly those that have been skeptical about gold are changing their tune. And that's why we remain long of gold, been long of gold for a long time now. This could be because of fear of an audit of Fort Knox. The gold rush. U.S. gold imports hit a record 30.4 billion in January. It could just be a repatriation of our gold out of foreign central banks, marking a second consecutive month of sharp increases, according to Zero Hedge. This is double the amount seen during the 2020 pandemic. At the same time, the U.S. trade deficit with Switzerland reached a record 22 billion. This suggests the majority of imported gold is coming from Swiss vaults. We don't know if we're buying it from the Swiss. We could just be repatriating our own gold from Switzerland. So not really much to read into this yet, but you got to wonder whether or not, with all the what you call conspiracy theories about the gold not being in Fort Knox, whether or not they're bringing in the gold to put into Fort Knox. So I'm not of that belief. I think the gold is there, but you know what? Conspiracy theorists have been right quite often these past few years. So we'll keep a very open mind. Now, taking a look at sentiment, this is the bullish percent index for the NASDAQ. I'm going to stick with a daily chart here for a reason. As I mentioned, I think that we are oversold short term. Longer term, we're not oversold. We're still overvalued. We're not oversold on longer term. Longer term basis would mean weekly charts, would mean monthly charts. We're not there yet. We're nowhere near it. So can we get a rally? I predict that we are going to get a rally, and it's probably going to come tomorrow. Even though we're down 0.82% right now on the NASDAQ, I'm making a bold prediction, but it's not the first time. So here we have a really unsustainable downtrend in bearishness. So at some point in time, we are going to get a reversal bar here, and it's going to be a rip your face off rally. It's going to be brutal. And a lot of the shorts, we covered I still have half of our position of SQQQ. So we do still have a short hedge on the market, but nowhere near what we did prior to last week. We have 4 consecutive down weeks. They could push us down to a bit lower where we've got support, but I don't think that we're going to close out the week without a significant rally on the NASDAQ, because this is just simply not sustainable. It's not going to happen. All right, so I've been requested to go over some chart requests. If you're not currently a member of our forum, head on over there. It's free. I will pop the link into the description box. No credit card required. Head on over. I'll go to comments in a moment. All right, so we got Para, AAL, Clean, SQQQ, Bitcoin for Medi, Ethereum for the lovely Jody. Let's get to it. Ethereum for the lovely Jody. Okay, so I think we go lower. I don't like crypto right now. Will I continue to dollar cost average every Monday the same amount? Yes. But when I see stochastics rolling over like this, that's just another lower high. Right? So it's just another lower high. So momentum is going in the wrong direction. The trend is clear, it's defined, it is down. The however is that while on a healthy sell-off in a bull market, I would say buy this lower band of support here. I wouldn't do that. I think we're going to break this lower band of support. We're going to overshoot to the downside, and we are going to hit. I'll give you the number in a second. I am on a weekly chart, right? No, actually daily. Okay. I think we're going to hit 1,763. That's my number. That's where I think we're going on Ethereum. Can I bring it up here? I don't really trade crypto. Oh, we do. Oh, that's Ether. I don't know the symbol for Ethereum, so I have to apologize. Look up. Let's give it a shot. The Bloomberg Ethereum index, I don't think that's trading right now, but we'll take a look. It is. It is trading. So we're trading down to 2141. I don't think this is the same price setup. It's not. It gapped down, and we closed at 2017. So this is the numbers don't correlate. Think or swim to the spot price. So I wouldn't go by that. It's down, but I think that probably takes you in the neighborhood of where my price target is on Ethereum. Now, Bitcoin, I'm also not bullish on. And I want to remind everybody that, everybody's been saying that Bitcoin's the new gold. It is not the new gold. It is the new gold would be trading with gold or better right now. It is trading as a risk asset. Even with all the ETFs that are out there, along with Bitcoin, the volatility is still tremendous, down 14% last week. So the weekly chart, not looking good. Let's go to a daily view. And you're getting lower highs. There's nothing to like here. Let's see if we have some support. And these would only be short-term support levels. Around 8,000, 80,000, that's a big round number. So that makes sense. But in terms of a final bottom, you really need to be taking a look at a monthly chart. And it looks as though 80,000 is the number on a monthly chart that's got to hold. I'll tell you right now, if it doesn't hold and we close out the month of March down below 80,000, we're coming down to around 65,000. So be forewarned, there's a big, big gap. Remember, this month here, the month of November 2024, made up a big portion of the rally off of the breakout point here seen in October. So this rally from this low here to the high of November, Jesus Christ, it almost doubled. Think about it. That's a big air pocket. Let's go to comments. Jody, hello. Wow, I got so many comments I didn't get to yet. Talon, hey, brother. Paul, hey, Paul. Bob, still in Florida. I will be down there next week. I'm going to West Palm Beach. Up in the Villages, next 2 weeks in Disney. Nice. You got the grandkids? Good for you. Sounds like you're having a blast. Did not stay in my truck. Stay family play go. Good for you. Good for you. All right. Michael, people not in good shape. Isn't spending. I'm sorry. Isn't spending or spending is my question. I'm not following you on that question there, pal. People not in good shape isn't spending or I don't understand it. If you want to rephrase it, I'll get back to it, okay? Bitcoin set to close under 200 SMA. Yep. Are you still in charge? Would you consider as you got to enter them in the forum? Okay, I posted the link. Just head on over, enter it in there, and I'll go over for you. I can't use this because there's just too many. There's just too many comments. Yeah, Talon. I was very pleased with PI and how it recaptured 100 last week. We did some buying last week. You're welcome, Jody. Okay, so that's Bitcoin. Let's talk about some other names out there. Before we do, I want to see what the thugs in Congress are doing. What are they selling? Nothing last week, so nothing reported, but they've been doing some selling here. Let's see what's old Nancy's doing. The Pelosi tracker. She hasn't done anything since January. Out of the money puts. Large block out of the money puts. This could be a contrarian indicator. People getting bearish now, it's kind of silly. You got to wait for a counter trend rally and then initiate your bear operations. I plan on doing it myself, but for those out there that are shorting right now, it's kind of foolish to be doing that. All right, let's take a look at chart requests. I'm going to bring this back over here so I could track. We did Bitcoin. We did Ethereum. Para for George. Paramount Global, weekly view first. I think we spoke about this one. So what happened last week? This is the auto Fibonacci's. And we hit resistance on the Fibonacci retracement level. And we backed off. So we have, these are the automated trend lines. We broke through 2 weeks ago, did a retest the prior week. Last week, we got follow through. Short-term blip with those Fibonacci's. I think that ultimately this gets resolved up. Daily view. This is where I think we're going. Automated trend line, folks. I did not draw those. I drew the one in white, not this one here. This is where we're going. 13.347. I think we're going up. A little bit. I wouldn't buy it here. I would ride it out, though. I think we're going higher. AAL. This is one that Pat likes. Oof, this one got hurt. All right, so we have some Fibonacci support, and we bounced off of it last week. These support levels I drew myself. So now you have 1363, which is going to act as resistance. We closed at 1303. I think we're coming down to about $12 a share. Trend Spider, the algorithm's telling me I'm being nice, and it's probably coming down to around 1150 per share. So I wouldn't get in front of this. You still have a lot of volume. Look at the volume last week. The path of least resistance is clear. It's down. CLNE for Sean. Weekly view. It broke right through the Fibonacci support. The week before last, did a check back last week, reversal. This has got all the classic signs that it wants to go lower. This breakout here failed. So it's showing support at $1.45 per share, Sean. But the weekly Stokes are not looking good. So if that breaks, we're coming down to around 83 cents. So I'd be really, really careful here. This wants to go lower. And one thing, I don't know what this company does. It says Clean Energy Fuels. I don't know whether or not it's a company that is alternative energy play, like First Solar. Those companies, they do better when oil goes up. So they're very highly correlated to oil. Oil's been weak, therefore these names are going to be weak. So just be careful with the alternative energy plays. Very, very dangerous area right now. SQQQ, for disclosure, I still have a position here. We broke out last week. What I'd be watching for this coming week, and I keep saying this, even though the NASDAQ is down, it's probably going to break the new session lows. Down over a percentage point again. Let's see what happens here. It's going to be interesting. Um, so SQQQ, I think, is ultimately at one point in time this coming week is going to do a retest of 33 spot 24. And then we'll probably get a follow through. I want to be out of most, if not all, longs uh, by the end of the week, ideally, and go to cash. Just simply sit in cash. I'm not saying I'm going to buy any more SQQQ. I might, or I might just sit with my current position. Not quite sure. We need to get a vibe for, again, sentiment or the sentiment indicators telling us that we're at extreme levels and we need to get a rally here. There's too much bearishness. Yeah. I mean, this time last week on Twitter, X, whatever you want to call it, all you saw was that fear and greed indicator all over. I didn't see one post this week about that. Fear and greed indicator. I think that's CNN. Yeah, there's CNN. So this time last week when I was prepping for the show, this is all you saw. We have to rally this week. We have to rally this week. And I said, no, I'm not buying into it. I still think we're going down. We remain the same, extreme fear, but at some point in time, they're going to get it right. And the price action of late is telling me that they're probably going to rally us in the next couple of days. So that's my take. I'm sticking with it. So I think we're going to retest 33.24, then we proceed higher. Now, if we close down below 33.24, then I have to give it a second thought and say, okay, maybe I do not want to be long of this anymore. Maybe we're going to get a longer term rally. We'll reevaluate. Right now, I'm still bullish on SQQQ and looking to reload. As soon as the pressure on sentiment comes off, we get a counter trend rally up and into resistance levels, then we look to short. Not now. People who are shorting now, crazy. Pfizer. I think this is the Darth Vader of most companies out there, but my opinion doesn't matter, and it looks as though it wants to go up. It's consolidating nicely. Had a bullish reversal week last week. It outperformed the S&P 500. We're holding support levels. Momentum is rising. Volume was good. What can I say? I hate the company, but it looks like it wants to go up. You're going to have resistance right up here at 27.18. Soon thereafter, if you do break out, 27.94. Momentum is measured by Stokes, rising, volume increasing to above average on Friday. Make sure I didn't miss anybody. All right. Something just fired off. Let's see what's going on here. NQ, they're breaking down. New session lows. Down 1.19%, 1.2% now, and increasing. Watching volume, 5-minute chart. We're already 4 minutes into this 5-minute bar, and volume is increasing, but still below average. Down now 1.33%. Oof, big sell volume there. 1 point, wow. I think this is a liquidity hunt. I think they're taking out stops right now. Here are the E-minis. S&P 500 broke support and closed there. This is a check back to a 5-minute on a 5-minute chart. The checking it back, trying to recapture. This is probably going to fail. Now, if they manage to close it back above that purple line, that's a bullish setup, and that would solidify that this is probably a liquidity hunt. And you have, what that means is that you have institutions that are out there. They don't want to pay retail. What they want to do is they're buying big blocks. So what they want to do is they want to take out the stop loss orders where it's logical that they sit. And then they take the market up higher. So if you ever wonder why when you put a stop loss order in, you're disciplined, you look for support, you put your stop loss order in, it gets hit, you get taken out of the trade, and all of a sudden the stock goes up higher, that's a liquidity hunt. That's why I don't use static stop loss orders. All right, folks. I don't think I missed anybody. Let me validate. Skylar, we have one last minute request. I'm going to shut it off at that. I think this is a liquidity hunt. Taiwan Semi, soon to be an American company. All right, let's clean this up. We have no support levels in this range. We're right at the lower band of declining downtrend channel, or descending wedge formation is more like it. You do have support right here, and we bounced off of it. It was support back here in September, support back here in June, resistance in July. So this is a significant support level. If we retest it again and it holds and we rally off of it, I think that it's going to rally short term anyway. But if we close down below it, we're going down here to 155, 156 per share. Momentum is not looking good. I'll tell you that right now. So any short-term rally here, unless you're an investor for the long term, I don't know what your time horizons are. But if you're a short-term trader, then I would not stay long, because both lines on Stokes are trading down below 50. Rallies tend to fade. So a rally up to around 197, 198 per share, I'm out. All right, folks, everybody have an awesome night and have a profitable week. Don't forget about TrendSpider, 35, bare minimum 35% discount. Use the link below on YouTube, link above on Twitter. I give it away free to our silver and gold level members. So sign up, 14-day free trial offer. And everybody have a great night. Thanks for being here. My honor. And have a profitable trade.